Okay, so we had the Honorable J. Christopher Giancarlo, who served as the 13th Chairman of the CFTC. Mr. Giancarlo also served as a member of FSOC and Executive Board member of IOSCO. And Mr. Giancarlo is also the author of Crypto Dad, The Fight for the Future of Money, an account of his oversight of the world's first regulated market for Bitcoin, derivatives, and the coming transformation of financial services. The moderator today is going to be Tom Jessop, who is president of Fidelity Digital Assets. And with Tom, I'm going to turn it over to you. Thank you.
Great. Chris, wonderful to be here this afternoon.
Great to be with you, Tom.
We have a lot to talk about, but only 30 minutes. So let's start with the book. You have a book coming out called Crypto Dad, and I think it would be great for the audience to hear the story about how you got that name. But it's coming out in a couple of weeks.
Yep.
I've had a chance to read it. It's a very light, and I mean that seriously, read about your time at the CFTC, your introduction to digital assets and blockchain, and some perspective on the forward. And I'd love for you to talk a little bit about the why, the how, and just share some insight into what motivated you.
You know, it's interesting hearing our previous two speakers, Greg and Tom, talk about really the institutionalization of crypto. And as I was listening to them, standing on the side there with Tom, I was thinking about what a closely run thing it actually was that there is an institutional crypto market because of decisions we made at the CFTC back in 2017. If the CFTC had not greenlighted the launch of Bitcoin futures and eventually Ethereum futures, there would be no regulated marketplace for institutional money to go into. And that decision, as I say, was a closely run thing. There was a lot of opposition, both domestically and internationally, to the CFTC's decision not to block the self-certification of Bitcoin futures by CME and CBOE. But at the end of the day, the decision really came down to, I think, a fundamental belief in markets, that ultimately it's not for unelected regulators to make value decisions about products for the marketplace, but to let the marketplace work out what the value of those products are. And if you, as we did, have a fundamental belief in markets, and fortunately coming from the CFTC with a proud tradition of new market innovation, no other regulator in the US or in the world has overseen more new product development in the last 20 years by a country mile over every other US domestic and foreign regulator, as has the CFTC. So it was in the agency's DNA, but as I explained in my book, it was also within our decision-making and the discretion of the chair to move forward with this, and we did, and as a result, we've got a large institutional market. And actually, Tom referenced how I got the name Crypto Dad. It was a few weeks after the green lighting and the launch of Bitcoin futures that I, along with Jay Clayton, were called before a Senate Banking Committee hearing to explain our approach to crypto. In the case of the CFTC, that included the green lighting of Bitcoin futures. And I fully expected to be lambasted by senators for that decision. And as a result, in the weeks leading up to that hearing, we prepared a very lengthy, tome-like, detailed explanation of our decision to greenlight Bitcoin futures. And we submitted that. And the night before the hearing, as I was preparing that 5-minute opening statement that you get to make, trying to distill whatever it was, 60 pages down to 800 words, I just realized there was no way we could do that. And so I decided to take a different approach. And I thought back to my family's annual holiday ski trip we had done at New Year's, where my nieces and nephews and my own kids in their 20s had said to me, "Uncle Chris, tell us about Bitcoin and Bitcoin futures and why you did that." And these were 20-year-olds that my brothers and I had tried to interest in the stock market all their young adulthood, and believe me, no interest. Sorry, STA, but no interest in the equity markets, but huge interest in crypto. And it struck me that there's something going on here. There's a true generation gap, almost as big as the generation gap that we grew up in back in the 60s and 70s over social issues like the war in Vietnam and civil rights. Well, today there's a generation gap as big as that gap, but it has to do with technology. And this is a young generation that will never set foot in a bank branch or care to learn how to use checks. For them, that is so antiquated. That is so their parents' generation. They intuitively get digital money. They intuitively get tokenization, and they intuitively get Bitcoin and crypto. And as I talked to them, I realized there was something here. So as I appeared in front of that Senate hearing, I actually pushed away that 60-page treatise, and I said, Senators, if you don't mind, I'd like to speak to you today, not as the chairman of the CFTC, but as a dad. And as a dad, I think we owe it to this generation to try to get this right and not just dismiss it as something that, belongs to young people, is not worthy of the attention of serious people. I think we owe it to get crypto right. And as a result of that, my Twitter following, went up to 50,000. They started calling me Crypto Dad and Crypto Daddy and all this. But you know what? It was fun, and it actually gave me a way to speak to these issues and recognize that generation gap. And now, as I hear people talk about, a $2 trillion marketplace, the institutionalization of the market, I realize it really came down to a few decisions we made in the fall of 2017 that we didn't back away from, we didn't shy. We were unafraid to take the political risk of greenlighting this, and as a result, we de-risked the institutional marketplace for crypto derivatives. And for those agencies here and abroad that were afraid to take the political risk, what they've done is created an enormous amount of operational and regulatory risk by that irresoluteness to take political risk that we were willing to take at the CFTC.
Yeah, just there's a great passage in the book talking about the fact that this was a reasonably unpopular perspective among regulators. I'll try to set this up. You were at a meeting in 2016 with the FSB, the Financial Stability Board. Mark Carney was the chair. You were invited to the meeting, and there was a lot of consternation about Bitcoin futures. And at the end of the meeting, you said, and I paraphrase, crypto is not going away. We can't ignore it or try to suppress it. Technology like this is a roaring wind. You can take shelter from it, get blown away by it, or hitch a sail and ride it, which I thought was really prescient. And here we are 5 years later, and we're just sort of getting around to figuring out what the regulatory landscape is going to look like. And so I love your perspective, because if we think about the last major significant technological change, it was in the 90s with the internet and internet technology. And there were some similarities in that we didn't really know where it was going to take us, but we knew that it was important. And I think there are some parallels here with this market. Yet in government, there was reasonable consensus that you needed to support development of the technology. Under the Clinton administration, there was a moratorium on state sales tax that was passed, which enabled e-commerce, had negative effects later on, but there was generally a welcoming view in Washington, and that's why the largest internet companies and tech companies are in the US and nowhere else. What have we gotten wrong? What do we need to do?
So I think those parallels are really apt. That first wave of the internet was an internet of information. It was the decentralization of information away from centralization like Encyclopedia Britannica and major publishers toward a free flow, free information available using consent. The way Wikipedia works is on a consensus base of establishing truth. And if you think about it, it was both an enlightened view of not just the Clinton administration, but a Gingrich Congress that came together and said, we're going to approach this in a first do no harm approach. But it also was somewhat organic because of our tradition, our democratic norms of freedom of information, our First Amendment principles. In Washington, we don't have an alphabet soup of information regulators because our Constitution prohibits the federal government's role in policing speech. And so the first wave of the internet, you might say, ran into a regulatory light zone in Washington. Okay, well now we're in another wave of the internet, and this is a wave, they call it the internet of value. This is a wave that is going to affect the traditional intermediaries and guardians of value, being banks, trustees, financial service providers. And guess what? There's not a regulatory light zone, there's a regulatory heavy zone when it comes to things of value. Governments have long presumed the authority to regulate things of value, and society has long given to the government. We don't have one market regulator in Washington, we have two. We don't have one banking regulator in Washington, we have three. We don't have an absence of state regulation of banks and trust companies. Every state in the union has both securities regulators and banking regulators. When it comes to things of value, this wave of the internet is running into a regulatory heavy zone. And those regulators recognize their constituents of financial service companies, of banks. And so this wave of the internet is going to be unlike earlier waves of the internet. It's not going to receive the same first do no harm, let it live, don't ask permission, seek forgiveness approach. And as I advise companies, I say, we need to take this into account. Now, having said all that, all the regulation in the world is not going to suppress this innovation in the same way that all of the restrictions on information in countries around the world that are not democracies didn't stop the first wave of the internet. They're not going to stop. This technology is as powerful as was the first wave. It is naive to believe that what the internet did to retail commerce, what it did to information, what it did to photography, where's Kodak, what it did to all the institutions that governed information, it's naive to think it won't do the same thing to banking and finance and money itself. It is going to do it. This is a powerful wave. And as I said to that group in Basel, Switzerland, this is a powerful win. You can either try to hunker down and avoid it, get blown over by it, or hitch a sail to ride to it. And the part you did leave out was, in the United States, we've traditionally tried to hitch a sail to ride to it,
right.
And I hope that's what we're going to do again this time.
Yeah, and it's interesting because I think right now, and it was sort of talked about briefly in the previous panel, there's sort of the battle lines are being drawn, and I think, you know, coming from like you and others in the room from the traditional finance world, there's always a question of, can we do it, right? When faced with some opportunity, it's like, okay, well, do the regs allow us to do this? Where the tech ethos is very different, and it's very much, can it be done? It's a very absolutist. And so you have these two worldviews now colliding in Washington, and I'd be curious to get your perspective, you know, because obviously a lot of folks petitioning you at the CFTC for certain things. How do you think this is going to play out? How would you advise the industry, maybe the industry and the regulators, to figure out how to find common ground here?
Yeah, I think the ground is shifting, and right now I think we're in a short-term shift that is fairly hostile to this new innovation. And I don't know whether it's a combination of entrenched interests, both commercial and political, but I do sense certainly, you know, in the Trump administration, there was no effective crypto policy. There's no question that the president from time to time would denigrate Bitcoin, but that wasn't official policy, and so it was left to each agency to formulate their response to this innovation in a way that was appropriate for their agency. And so agencies like the CFTC, with its long tradition of innovation, continued to see this as another asset class where innovation should thrive. And other agencies like the OCC under Brian Brooks, similarly. Other agencies, perhaps with investor protection mandates like the SEC, were less forward-leaning in terms of welcoming this technology. But each agency responded without any type of uniform edict as to what their response should be. I get the feeling now that there is more of a uniform apprehensiveness bordering on a criticalness of this innovation. And what I do hear a lot about is financial crime, about volatility, the downside of this innovation. But what you don't hear, which I think is unfortunate, is any discussion of how this new innovation could actually take our existing financial system and improve it. You know, technology, as one of the earlier panelists said, there's always a seamy side and there's an upside. You take any technology, there's always a good and a bad use. What we've traditionally done in the United States is found the best use and use that. I think there's an opportunity to increase financial inclusion, to lower cost, to reduce latency, to actually take our economy and reduce the type of rent collection that even Chairman Gensler has lately been talking about by taking this technology and using it for the betterment. And I'd like to see a little bit more talk about how it can be used to improve our financial system as opposed to only addressing some of its downside uses.
And do you think, given you've obviously been involved in this space and been a student of the space for many years, but given your knowledge of what's happening in the technology, I guess there's also sort of aligning to the industry and then Washington, this view that, can it be regulated within the current framework at the SEC and CFTC, or does Congress need to charter some new regulatory framework given the uniqueness of the technology? Do you have any perspective?
I do. So first of all, the Securities Acts were written in the 1930s. The Commodities Exchange Act, by which the CFTC operates, was written in 1936. I mean, these statutes in no way anticipated a revolutionary technology like this. So ultimately, we're going to need crypto-native regulatory structures put forward by Congress where only they can be put forward. I believe it will eventually happen. I hope it happens sooner rather than later. There's some very good ideas float around. Ranking Member McHenry has got some good ideas on this. Senator Toomey is working on some good ideas. And it's not partisan. Across the aisle, there's some very good thinking on this. But in the meantime, until we get to that crypto-native regulatory framework, regulators are going to have to work within their existing statute, but repurpose those statutes. Instead of thinking about the detailed existing process that was designed for an analog world, let's distill from our existing frameworks what the public policy is, and then work our way to achieving that public policy, but using new models and new structures. And that's what we did at the CFTC in greenlighting Bitcoin futures. And that's one of the things I've written about in the book, how we were able to do that and create a very well-functioning, regulated crypto derivative market today that is entertaining hundreds of billions of dollars of activity on an almost daily basis, quite successfully. It can be done working with those old statutes, at least for the time being, until we can get to new regulatory frameworks.
Coming back to your comment earlier about modernizing the industry and using this enabling technology, there's, obviously we've defined DeFi, it was discussed in the prior panel, decentralized finance, and so sort of the mirror image of that is what's now called TradFi, traditional finance, the world that we all live in. And I would be curious, I think, Tom Chip has talked about prime services in the prior panel and disaggregating the functions. And I think it's a good analogy because what we talk about is anything you can do in the traditional finance world, you can do in DeFi. You can send a payment, you can lend and borrow, you can do many things. And I'd be curious, again, still very early, but if you were to sort of project a future state of TradFi, DeFi, what does that look like?
Yeah. So let me tell you why DeFi is so challenging for regulators. The way regulators approach almost regulating any commercial ecosystem, and whether it's financial services or healthcare, it's pretty much the same. Regulators look at an ecosystem, and the first thing they say is, where are the intermediaries? Where are the consolidators?
Whose throat can we choke?
Basically, who can we put a leash on, right? And you intermediaries, you're now licensed with us, okay? And here's the deal. You're going to help us. You're going to give us certain information. You're going to tell us what's going on in your market. And in return, we're going to give you some quasi-monopoly status. We're going to give you some advantages and privileges and certainly barriers to entry. But in return, there's duties that come with it. And it's not to make fun of it. It's worked pretty well in an analog world. Right. Along comes DeFi and shatters the whole notion of the intermediaries. And so regulators look at this and say, yeah, how are we going to regulate? We need intermediaries. And it requires a change in thinking. Instead of regulation that's entity-based, which is analog regulation, we need to think about regulation that's activities-based. In other words, what are the activities that we're looking to condition? What are the public policies that we're trying to overlay on this marketplace, and what are the activities that are conducive to that, or what are the activities that are counterproductive to that? And then let's take an entity-based approach. In other words, let's take for surveillance, for example. Current surveillance in that entity-based approach is have the entities report in.
Right.
But once you go to a blockchain world, the regulator can be a node in the blockchain, can use sophisticated tools for pattern recognition, find activities that are inappropriate, and then reverse engineer to find the entities that are doing that activity and sanction them, punish them. So it's not that we can't go to an entities-based approach. In fact, the technology is now appearing that can be used to do an entity-based approach. Yeah. But regulators are going to have to think in a new way. But guess what? There's a new generation that already is thinking in that way. We're going to get there. The problem is old horse regulators like me can't quite get their minds around decentralization, but it's going to happen. And ultimately, Tom, I think the world will be one where you'll have some things more centralized, something decentralized. You know, you look at human history, you look at institutional history, it goes through periods of consolidation, periods of decentralization. You know, just 20 years ago, as we talked about earlier, you know, there were 20 to 30 major dealer banks in any given asset class making markets and others. You know, now most wholesale markets are down to 6 or 7 major players. We're in that period. I think decentralization and DeFi is coming along just in time when we kind of reach an apex of consolidation. We need to see some of that consolidation broken down again to get to a more healthy ecosystems in a lot of our wholesale markets. So this may be coming at just the right time.
Yeah, I agree. And it's interesting, you know, your comments about how DeFi or this technology will transform financial services. Even within the agencies, they may have to think very differently about the functions of the agency and how they perform their duties, which will be interesting to watch. But we have about 10 minutes left. I wanted to pivot to a project that you are the founder of, that you're very passionate about, that I'm fortunate to be an advisor to, which is the Digital Dollar Project. And I thought for the benefit of the audience, maybe just to talk a little bit about what is the project. And, you know, I think there were 3 or 4 primary use cases that the group is pushing forward. If you might just talk a little bit about that, and then we'll talk a little bit about some of the longer term implications of that.
Sure. If you don't mind, I might just quickly tell you how I got there. So I went to the CFTC out of the swaps market to help reform the swaps market. And while I was there, crypto came about and changed so many things, and we wound up, that became a key part of my work there. And it really started my mind going down a whole thought pattern as to where this leads. And I've come to the conclusion that the society's 10-year experiment with digital money has caused governments to go into almost what I call a fight or flight moment. They're recognizing that if anybody's going to control digital money, in many cases, governments wish to be the ones to do it. That's certainly what's happening in China. And I think within the next 10 years, every major central bank, every major economy in the world will have sovereign digital currency on offering. And if you believe that, as I do, then you have to ask yourself, what values will that digital money carry? Because money carries the values of every society it represents. Take the dollar, for example. Its role in international commerce, at least in the post-war era, has carried with it values of free markets, free enterprise, the rule of law, and privacy rights. And I think those are aspirational virtues for many of the users of the dollar in the global environment. But, you know, those aren't necessarily the values of every major society in the world, and they're certainly not the values of some closed societies and non-democracies. And as you look at the development of digital currency by non-democracies, you hear a lot about other kinds of values of state surveillance, of social credit systems, of central control, and not necessarily the rule of law putting any restrictions on governments, and also government interference in markets, the home team stepping into markets to drive it up if it's going down. And so the values that are encoded in digital money, that's really the key issue in development of the digital currency of the future. Will the values that brought the dollar to where it is in its analog state, will they be the values of digital money of the future, or will other digital approaches to digital money prevail? And so we started the Digital Dollar Project as a self-funded 501c3 foundation in order to bring the values of the private sector to bear as the United States takes up consideration of a digital dollar. It's very important, I believe, that if the United States is going to go down this route, and I think it eventually will, that it be done in the same way that the United States explored the lunar landscape, that it be done in the same way that the United States explored the first wave of the internet, and that was a partnership between the private sector and the public sector. And not, I coined a phrase in the book, at the end of World War I, French Premier Georges Clemenceau said, looking back on the carnage of World War I, he said, war is too important to be left to the generals. And in my book, I've coined that phrase to say, money is too important to be left to central bankers. And that's not to disparage central bankers who I think, are approaching this, in a diligent, thoughtful way. But money has always been as much a social construct as it is a governmental construct. And society, and certainly in a free society, has as much to say as to what value should be encoded into the dollar, a digital dollar of the future, as they have in the analog dollar of the past. And so we formed the Digital Dollar Project and put together a tremendous advisory board of thought leaders in a range of areas, from issues of privacy, of constitutional rights, but also in areas of central banking, of commercial banking, of payment systems. And we've announced recently that we're going to be launching a series of pilot projects involving private sector actors in order to explore some of the uses of digital currency. And all the information we gather will be made publicly available for use by policymakers here in Washington, central bankers, of course, and the public at large, academics, researchers, otherwise, to help inform what form a digital dollar should take in the future.
So Chris, talking about the public-private partnership, one interesting twist on the CBDC discussion is the incredible rise of stablecoins,
Yes.
right? And effectively, obviously a proxy for, but a representation of a CBDC, but in a different form. And one might say that given how long it takes for government to establish policy implementation, the fact that we live in a socially enabled world where virality is important and creating that network effect, one might argue that regulating stablecoins through the banking system and creating that type of transparency and then letting banks and other private sector actors push that into the populace might be a faster mechanism than waiting for the government to issue a CBDC. And then you get into secondary discussions around concerns about privacy or the ability for governments to control money. And I'd be curious as to how you think that, when those battle lines, it's not really battle, but how you think that those developments will work stepwise to the desired future state.
So I hope it works a lot like the first wave of the internet did. In other words, a big, glorious mess of innovation,
Right.
coming from every sector. Remember, the first wave of the internet, it began with the DoD initiative, right? The government was involved, but the private sector was involved, right?
Yeah.
And I think that's what we need in terms of exploring digital money. Let's be honest, the central banks have been watching the private sector evolve money for the last 10 years. This hasn't been led by central banks. It hasn't been led by government initiative. It's been led by a private sector initiative. And it's been so remarkably successful that central banks are now sitting back saying, well, maybe in a sense we need to get in the game. So the private sector has really been where the innovation initiative has come from. Mm-hmm. And I think that that's a good thing. I think there's a lot for the public sector to learn from the private sector. And if it was left to the public sector, I'm not sure we'd get there as fast as we have because of the initiative. So I'd like to see this sort of glorious mess continue for some time to come, where both the private sector can learn from the public sector and reverse can happen as well, where we can work our way through what digital money of the future looks like. But it goes beyond that, because I told you about my concerns about the value in public sector money. In some ways, in a healthy environment, each side would keep the other ones honest. If there is a private sector digital currency, then it will be hard for the government, in a sense, to ignore privacy rights, because you can then go to a private sector coin if you're afraid the government isn't honoring your privacy correctly. On the other hand, it could be that a state-run, in the case of the United States, a digital dollar with Fourth Amendment protections of privacy might be a public option against, say, a coin run by a social network provider that is selling your data and mining your data for its value. So maybe the healthiest environment, if you think about it from an individual liberty point of view, is some combination of private sector, public sector money. Now, I know there's a lot of people that hearken back to the post-Civil War, pre-Federal Reserve period, when you had different currencies, both national banks competing. Well, maybe it's too soon to say that that's a problem. Maybe in the short term, we need healthy competition between the private sector and the public sector to work out, society has a chance to work out these issues. At the end of the day, though, a free society needs to make known its expectations for privacy in digital money, anti-censorship in digital money, rule of law in digital money, and the jury's not out on a global basis as to whether those principles and those value sets are going to win out in the digital money of the future. And the time is now. In many ways, Tom, that's why I wrote my book, to get the message out that money is changing before our eyes. Changing before our eyes. And if a sovereign people don't speak up and make clear what their expectations are for what that money is going to look like, then the decisions are going to be made in very small conference rooms in Basel, Switzerland, and Brussels and Washington. And it's very important that the values that we've enjoyed in the analog dollar, I believe, remain in the digital dollar of the future.
Yeah. No, and we're coming up on time here, and it's unfortunate because there's now this whole geopolitical aspect to this with what China is doing and concerns about, de-dollarization and other things, which unfortunately I don't think we're going to get a chance to talk about, but hopefully a bit more of an impetus to drive some of these discussions forward.
Real quick, if you want to understand what China's doing, you need to think beyond just digital payments. It's about using a digital currency as an operating system for a truly networked digital economy where all financial services will be accessible in a network using the digital currency as the operating system. It's a really, really big idea. And when I talk about regulators here not actually understanding how this technology can modernize our system and seeing the upside, they're really missing an opportunity that China sees and others see. The Europeans starting to see it. This is big, and this could actually solve a lot of the shortcomings of our existing system. We can just grab on the big picture and be willing to work with it.
Yeah, totally agree. Well, Chris, thanks for spending time this afternoon. It was a great discussion. Obviously, a lot more we could talk about, but really appreciate your insight and best of luck with the book.
Thank you very much. Thanks, everybody.